A very good evening to one and all, and I warmly welcome each one of you to this session on how to calculate total risk and specifically the stock beta. We will talk about, why managing risk is important. How do we calculate how do we calculate average returns? How do we try to minimize our risk? And should we or should we not avoid stocks which have a high or low beta? Okay, so before I begin, I have a couple of questions that I want to ask you people. So my first question would be that, as an investor, what are your primary goals? Like, what are those two basic primary goals that any investor do you think wants? Let me know in the comment section, or maybe you can just unmute and try to speak. So, talking about the goals that we have as investors. So as somebody mentioned, we want to maximize our wealth, right? So apart from maximizing wealth, when we talk of wealth maximization, what we say is that there are two things to it, right? One is I want my stock prices, the portfolio that I hold, the prices of those stocks should increase. So in a way, I want the price increments or the price appreciation, or I want an income or an additional source of income in the form of dividends, right? But once I get the income, once the prices have increased or once my portfolio is green, there is one thing that we usually want to not happen. What is it? Okay, so we would want to protect our wealth, right? We would want to minimize the losses or minimize the potential risks that we might face, related to the market. There could be a risk of inflation. There could be a market going on the downside. Like currently we are experiencing that situation, right? We can see that Nifty is drastically following due to a lot of reasons. Some sectors are getting impacted highly, while some are not getting that impacted to that level. Why do you think these sort of things should be taken care of? Anybody, any highlights on that? Do you want to tell me, why would you want to minimize your risk? What is the potential thought in your mind that is there when you talk about that? No, I want to avoid stocks which are very volatile, or I want to avoid stocks which are very risky. Why would you want that? Tell me. Anyone, anything you want to say?
Yes, ma'am. As an investor, we won't be wanting our portfolio to go down. If it's going up, we would be wanting that it should go up and up. So if there is any volatile company which is added in our portfolio, so that can be problem for us, well, because it can show loss in a big portfolio.
Yeah, I agree. I totally agree to that. Chalo, now let's talk about one follow-up question that is coming to my mind. So guys, think and tell me that, do you think all sorts of risks in the market can be avoided? Do you think, see, risk is an inevitable thing, right? Aap stocks mein invest karoge, obviously you will invest it with an objective of earning returns, and you would want to earn the returns more than dash. So what is that thing jo aapko compel karegi to leave the banks, leave the fixed sources of income and go to something a little risky as stocks? तो आप अपने नॉर्मल फिक्स्ड डिपॉजिट्स बैंक अकाउंट से मूव करके स्टॉक मार्केट में कब जाओगे? So if you have to answer this question, what will you say? The returns that you generate should be more than what? Tell me.
Inflation, ma'am.
Okay, it should cover up the inflation rate, right? So I can say that agar inflation market mein 8% hai, so my returns should be able to cover up that inflation, correct? But any other term do you want to give to this instead of inflation?
Then the return should be more than any risk-free return that we can get in the market.
Correct. That is the word I was looking forward to. So we as investors, obviously, think of it like मैं बैंक छोड़ के risk भी ले रही हूँ और मैं risk लेके returns ज़्यादा अगर earn करना चाहती हूँ, तो that return that I generate should be obviously more than the no risk that I'm taking at banks. तो अगर बैंक में invest करके, banks usually pay you a 5-6% rate of interest, right? So I would obviously go to a stock market, risk my money, have my sentiments attached to the stocks, and all sorts of nightmares that we have related to a portfolio. Why would I want to take so much stress? Because I would eventually want to earn returns which are more than the risk-free rate. Now, can anybody tell me in India, if I ask you that what is the risk-free rate, where or how can you look for it? Like, where would you go and look for such things? Where will you get the risk-free rate? Do you think it would be wise to take the rates on the government, government yields that they deliver on their bonds? What do you think? will be your measure for the risk-free rate?
Yes, ma'am. All the government securities. One example can be the post office. We invest also there, so that can be our benchmark.
Right. So for the risk-free rate, we generally take the returns, the returns, the risk-free rate which is prevalent for the 3-year government bonds that you can easily get on the RBI's website. Okay. But here the point is not that. The point is, do you think that if my total risk, I should be able to calculate my total risk, but do you think कि आप पूरे के पूरे risk को diversify कर सकते हो, या do you think there is some part of risk which will always be uncontrollable? Like, do you guys agree with me? Do you think कि all the risks that you come across can be diversified, or do you agree that nahi, there will be some sort of risk that cannot be diversified? So किसी को कुछ idea है कि मैं बोल रही हूँ diversified, non diversified, इसके कुछ terms होते हैं finance में? किसी को आइडिया है? Have you heard of any of such terms?
Yes, ma'am. Diversified, I know. Like investing in different industries. So even if one industry is going down, we can benefit from the another industry.
All right, I agree. So I can say we can have a diversified risk and undiversified. What other terms can you associate with this? Can I say controllable, uncontrollable? What else? So guys, today we are going to discuss something called the unsystematic risk and the systematic risk. Okay, and हम इतने time से beta देख रहे हैं. So beta is actually the measure of systematic risk, which cannot be diversified. So as a company, as an industry, हम or even as investors, what would we want? We would want to identify कि अगर किसी कंपनी का बीटा हाई है, so is it high compared to the industry? Is it high compared to the peers? And also, how is the company having high beta performing in a downfall market, or is performing in a market when the market is falling? Okay, so we'll try and look at those things. So for the first 15 minutes, I'll try and talk about the conceptual part, and later part of the session, we will have a practical example where I'll tell you how you can, rank different stocks in a particular sector as using different Excel functions. So without any further ado, let us begin with that. Okay, so guys, when I talk of total risk, can you give me some synonyms related to risk? मतलब जब आपके mind में risk आता है या आप ये word सुनते हो, what kind of words come up in your mind except risk? Tell me. I have written it on the slide. Try and putting more points here. So it's the probability of loss. It's the fear of my portfolio going down. So these are some of the things we associate with risk. But in finance, when I generally talk of risk, I am talking about standard deviation. Why? Is there any economic background student who can tell me what is standard deviation? Like generally, what is the definition of standard deviation? Anyone? Any idea? Yes, guys, tell me. Okay, so the risk is measured by variance or the standard deviation, and standard deviation and variance both study the dispersion or the volatility of the asset prices with respect to its average. Okay, so what is average? Average, so I'm sure sabko pata hai. Fir bhi let's just talk about it for a minute. So tell me what is average. Basically, I wanted to hear the word mean. Okay, so mean and average are synonymous, and usually we want to stick around securities which do not diversify a lot from its mean value, right? मतलब अगर average आप सोचो कि किसी भी stock का price जो है वो average 300 के आसपास रहता है, and there is a market downfall happening, so you would not want ना कि उसका dispersion इतना ज्यादा है या stock की इतनी volatility है. See, when the market is performing really well, then you are a very happy investor, because you know कि अगर mean value से volatility बढ़ रही है तो वो positive side भी बढ़ेगी, negative side भी बढ़ेगी. So when the market is very positive about the sentiments of the people, then you will expect a high volatility in a stock having high beta, and as a result जो mean value है, if the stock mean value is 300, you can expect a huge momentum in the stock price, whereas in case when the market is falling, you can at the same time expect a huge downfall in the stock price. And hence I will always say during the course of this session that one of the factors that you must consider about the stock is how its beta is reacting with respect to the market beta is always 1, right? But agar main aapko bolu ki kisi stock ka beta 1.6 hai, so, and you're positive about the market. Acha, when I say I'm positive about the market, tell me the other word that I use in finance When I am very optimistic about the market, what is that word called?
Bullish.
Yeah, so I'm bullish about the market. And what if I am the opposite?
Bearish.
Bearish.
Yeah, so I'm bearish about the market. So just think about it, guys. I mean, these sort of concepts, the objective is not for me to just read out what I've mentioned here. It is for you people to just, understand ki if I am an investor and, I have invested in stocks with high beta, what will happen? I am very bearish. Okay, I'm very bullish first. I'm very bullish and I expect the market to always give me good returns. So in that case, can I expect a positive outcome from all my high beta stocks? Just a yes or a no. Tell me. So my market moves by 10% and all the stocks having a beta more than the market moves by more than 10%. Is it good for me or not? In a bullish market? Just a yes or a no. Tell me.
Yes, ma'am.
Yeah, obviously, right? You will be very happy कि अगर suppose market की movement या market का average, just suppose हम market को जब मैं बोलती हूँ ना market, what I really mean is the benchmark or the broad market indices. So can you name the two major broad market indices in India? Anyone?
Sensex and Nifty.
Sensex and Nifty.
Right. So Nifty is the flagship index for which stock exchange? Very general.
NSE.
And Sensex is for BSE, correct? Okay. So
BSE.
let's take NSE as the benchmark or the market for say. Okay. Now tell me, is the stock, or let's consider State Bank of India. Tell me, is SBI dependent on the market or Nifty is dependent on SBI? Who is the dependent variable?
Nifty.
Nifty is dependent.
Consider, take a minute and think. Is my stock dependent on the performance of Nifty or is Nifty dependent on the performance of SBI?
Nifty dependent on SBI.
Are you sure, guys? Just checking your, confidence levels. Just a yes would work, a no.
Yes, ma'am.
Yes.
Chalo,
Yes,
theek.
ma'am. Yes.
Correct, fine. So, I guess you must have read on the screen and I've already explained that, the deviation is a two-way deviation. So when we talk of risk, if you have positive returns, the market is performing well, obviously you can expect a return which is on the positive side as well as on the negative side. Okay. Now for risk, we can consider both variance and standard deviation. However, we consider standard deviation. Why? Because standard deviation is the square root of variance and standard deviation is expressed in the same expressed in the same unit as the original value. So my average returns are in what? They are in percentage. Okay, so when I consider the standard deviation, that is also being expressed in percentage. If I take variance, it will not be great for comparison purposes, but still both indicate risk in finance. So we have to remember that for the time being. Okay, now let's see what different type of risks do we have. Okay, so before I move to this slide, let me ask you people that if I tell you that, we have internal risk, external risk, very general, internal, external. Give me some of the examples of internal risk. What do you people think are internal risks to an organization? Yes, guys, try.
Operational risk, ma'am.
Okay. What else? I'll give you a hint. Okay. So companies having high debt. So is it risky? And is debt internal to a company? I mean, obviously, right? A company can decide its capital structure. So how would you classify this risk? It is an internal risk, but what classification is it under? इसको आप किस term में डालोगे?
Financial risk.
Right. So it's a financial risk. One is financial, and then there is another risk, which includes, the labor unions not performing well, the machinery breakdowns, abnormal losses, and stoppages, breakouts. So many things happen. So in sari cheezon ko we can categorize into business risk. Okay. Okay. Internal, we know. Let's talk about the external risk, which is actually the risk which is most significant from the company's point of view. So tell me, what external risks come to your mind?
Market risk.
Right. Okay. Yes. What else?
Any fiscal policy.
Yeah. So I can say the pestle, the political risk, environmental risk,
Yes.
market risk. What else? some legal changes happening, government policies. Okay, so all that you people have mentioned, I've already written here. There's one more thing, purchasing power risk or the inflation risk, जो हमने session के starting में ही we've talked about it. Okay, now internal risk है. So internal risk firm specific होगा, obviously, right? It's internal to the company, so it's specific to the firm. Now, since it's specific to the firm, can it be diversified? Yes. Why? Because a company can determine the kind of capital structure it wants to have. The company can control the labor shortages. It can control the technology by upgrading its technology. It can reduce its leverage by, increasing its ROI. So a lot of things that a company can do to control its internal risk, which I can also call the following things, which is unsystematic risk, firm specific risk, diversifiable, controllable, and unique to a specific company. However, for external risk, we call them the systematic risk, non-diversified, and uncontrollable. Now tell me, if I teach you how to calculate total risk, which of this risk will you be able to diversify and which of it will you not be able to diversify? It's there on the screen.
Unsystematic risk can be diversified, can be controlled.
True.
Whereas systematic cannot be.
True. And I told you that what is a measure of systematic risk? Beta.
Beta.
Right? So beta measures the systematic risk. So can I say when I calculate beta, it actually determines the risk which cannot be diversified. Okay. So let us move towards how do we do it now. Okay, so just let us discuss this very quickly. We've already covered a majority of all the points. So systematic risk, non-diversifiable risk, again, cannot be diversified. It is not controllable. First point is quite clear, I guess, to all. Second, again, unavoidable. It cannot be eliminated by diversification. We'll spend a minute to discuss about what is diversification. So I want you people to, come over and tell me or explain me what is diversification. Yeah. No one?
Diversification in simple terms is basically it's opposite to integration. So in integration, there's accumulation of something, and its opposite is diversification, where we, for example, in the market, we put our in the portfolio, we take stocks from different sectors so that if something happens to one specific sector, we don't suffer a huge loss. So in that way, we diversify our stocks to help ourselves protect us from any further future loss. So in that way.
I totally agree. Yeah, anybody, any points? Okay. So as she said very correctly that, diversification is the opposite of integration. Integration means coming together, whereas diversification means putting our resources into different, you guys must have heard of the saying in finance that do not put all your eggs in one basket. So this entire sentence summarizes the concept of diversification. So the first step is always to look at different asset classes. So we have an asset allocation first. Once the different assets are allocated and the resources are allocated amongst different assets, then within those asset classes, we look for diversification in different sectors. We can have diversification related to, we can have diversification related to if the stocks have a high beta, low beta, we can screen the stocks as in how we please. Okay. Now, systematic risk is a non-diversifiable risk, and it is systematic or it is prevalent in the entire market because it is subject to the market conditions. Hence, it impacts the overall market, whereas the unsystematic risk is firm specific and it only impacts the specific company. आप सिस्टमैटिक या नॉन डाइवर्सिफाइबल रिस्क को एलिमिनेट तो नहीं कर सकते, बट आप उसको रिड्यूस कर सकते हो बाय यूजिंग hedging, asset allocation, speculation, not speculation, I would say, but yeah, hedging, arbitrage, you have a lot of options. Aap options या derivatives को use करके you can protect your portfolio. So there is something called hedging and arbitrage. So we can talk about it in some other session if you guys want. So now, as it is mentioned that total risk in finance is equal to the systematic risk and the unsystematic risk. Now, how are these two risks different? That we've understood, but now let us talk about how these two risks are calculated in finance. Okay. So before that, let us take a minute and talk about beta. Well, beta is, you can say it is a sensitivity of the movement in a stock with respect to what? Tell me. It's mentioned here with respect to what? So I try to measure, the volatility or the changes happening in the stock with respect to what?
Market.
Right. So I mean to say that if my market moves, it could be an increase, it could be a decrease. If my market moves, that is my Nifty moves, or it moves upwards, it moves downwards, how is it impacting my particular stock? So we have a couple of formulas how we can calculate beta. The market beta is always considered as 1. Any stock having a beta more than 1 is considered to be more volatile or is considered to be more risky in general. Okay. Any stock having a beta less than 1 is considered to be less volatile or is considered to be less risky generally. Okay. Now we will look at the formulas for calculating beta. Now आप screen पे देख सकते हो beta. The first way to calculate beta is using the covariance and variance formula. So it is covariance or covariance. What does covariance means? Covariance means that how are the stock returns or the changes in the stock returns related to the changes in the market returns. So we can have a positive covariance, we can have a negative covariance, and the value of covariance can range between minus infinity and infinity. Okay, this you can actually you should not get confused with covariance and correlation. They look similar, but there is a slight difference. So if time permits, we can talk about it at the end of the session. Then we divide the covariance of the market returns and the stock returns with the variance of the market. Okay, so let us have a look at the practical side of it. So this was the first way of calculating beta. Another way of calculating beta is you can use the Excel formula slope. Okay, so we can use the slope formula. Now, as I said that, we have to talk about the dependency when it comes to beta. So मैंने आपको क्या बताया था कि there is a dependent variable, there is an independent variable. So for beta calculations, we generally take the stock to be dependent on the market. However, there is no hard and fast rule. You can actually consider the market to be dependent or the Nifty to be dependent on the stock. But I would say that whenever you're working, so as an analyst, you should just follow one approach. So there is no hard and fast rule on that. Depends on the situation. And then we try to see which factor is dependent on which. So we can have different scenarios where the market can serve as a dependent variable and different scenarios where the stock can serve as a dependent variable. Okay. Now, stock market or exchanges are considered as a barometer of the economy. Why? Anyone? Can you try and elaborate this statement that they are the barometer of the economy? Why do you think they are? What do they depict, or what do they tell me? Okay, chalo, let's not waste time on that. Stock market is the barometer of the economy because let us say आपको fever होता है. So when you have fever, what do? You use a thermometer to check that fever. Although fever बहुत reasons से हो सकता है, but you need a standard where you can just check how your body is reacting to a particular infection or whatever. So you try to do it using a thermometer. So that thermometer for the market are the stock exchanges who try to regulate how the entire economy is performing. And they do it by their broad market indices, by their sectoral indices. We have thematic indices, etc. Now, when I talk of the unsystematic risk and the systematic risk, there is no way of calculating the unsystematic risk directly. तो हम क्या करते हैं, हम पहले सिस्टमैटिक रिस्क को कैलकुलेट करते हैं एंड वी सबट्रैक्ट द सिस्टमैटिक रिस्क फ्रॉम द टोटल रिस्क टू गेट टू अनसिस्टमैटिक रिस्क. नाउ सिस्टमैटिक रिस्क का फॉर्मूला होता है द बीटा ऑफ द स्टॉक to the power 2, like we take this square of the beta into the variance of the market. Okay, and unsystematic is total risk minus the systematic risk. As I told you that beta is a measure of systematic risk, hence we have considered the stock beta in the calculation of systematic risk. Okay, so these are some of the things we are going to learn on Excel today. Just to let you guys know, we will learn how to calculate average returns. We will see how we calculate covariance, how we calculate the coefficient of variation. Okay, one second. Yeah, so it determines how much volatility or risk is assumed in comparison to the amount of return expected from investments. So tell me that is the coefficient of variation, it should be high or low? It determines the volatility, how volatile the data is. So for your analysis part, CV जितना कम होगा उतना अच्छा है या जितना ज्यादा होगा उतना अच्छा है?
CV ज्यादा अच्छा है, but पेज कम होना चाहिए, एक पेज होना चाहिए.
Okay, guys, just got the joke. No, okay, that was a good one. I mean, just to break the monotony. Thank you. But then CV, the lower the better, because CV indicates volatility, and we would want the volatility of the stocks to be lower, the risk compared to the means or compared to the average to be as low as possible. So this the stock having the lowest CV or the coefficient of variation will be given the first rank. Okay, we also have something called the coefficient of determination, which is the square root, or which is the square of your correlation coefficient. Relation of any two variables can lie between -1 and 1. So the closer it is to 1, it means it's a strong correlation. That is, the two variables are strongly correlated, but because of the negative sign, they are negatively correlated. So can we try and think of some examples where two variables are negatively correlated? Can you think of any situation where if one thing moves up, the other falls?
Is and demand.
Demand
Yeah.
and yeah.
And similarly, price and supply can have a positive relationship. What else? Think from a finance perspective, maybe from the stock market, something like that. So can I consider a negative correlation between the gold market and the stock market? Can I?
Yes.
Also a negative correlation between me investing in banks and me investing in the stock market. What else? Let's just brainstorm a little and think of more examples. Acha, let me give you a hint. Okay, so will the banking sector's sectoral indice or the sectoral index have a positive or negative correlation on the benchmark index Nifty? Think about it. So if I only look at the sectoral index of the financial sector, so we have 13 sectoral indexes, and those sectors span across different, those 13 sectors actually contribute to Nifty 50. Now I ask you that, can you try and correlate any correlation between how the benchmark or the Nifty 50 is performing and how my particular sectoral index is performing? Can I have some sort of correlation between the two?
But that would be positive, right?
Could be not. Do all the sectors move according to the market?
But there's a high probability that banking index and Nifty will be the same correlation.
Amazing.
Because banking has the major weight.
Okay, what about IT then? Again, IT can also, we can
But
also,
it might not be that strong with comparing to banks.
चलो ठीक है, देख लेते हैं वो भी. And I have done that analysis for you guys, so I'll just show you in a minute how who said it. Can you name yourself, please? Whoever made this statement, I'd want to know.
Deep, ma'am.
Great, Deep. And it's great to have you in this session. And guys, just to let all of you know that Deep has actually been a very obedient and a very determined intern that we had from the previous batch. So I'm very, very proud to have him in this session. Okay, so to avoid risk, we choose stocks with less beta in situations where the market is falling. Why? Now you should be able to answer this at least, kuch to fayda hona chahiye, mere itne bolega. So I want you people to, interact and tell me if you agree or not agree with this statement.
Agree, ma'am.
Okay. Agree se nahi hoga kuch? Point. Give me your opinions. Give me your perceptions.
Opinion, for example, if we take the example of live, the current scenario, everything was falling, right? If we have a low beta stock, obviously it will fall less. For example, the FMCG stocks, as someone also pointed out, FMCG.
Yeah. Anything else you want to add?
No, ma'am.
Okay, so I hope you guys got an idea, right? That if we have stocks having high beta and stocks having low beta in a portfolio, that can also be another criteria for diversification. So this was the perspective I wanted to bring in this session. Now